Hello traders, this is the first of two weekly videos this week since markets are at interesting areas. This is going to be bigger picture video and I'm starting with the DAX weekly chart. Weekend is the time when it is recommended to check the weekly charts and daily charts as well. So let's start with the weekly first. This is the current week. And what we can here see on this chart is some similarities with the previous October-November period of last year. Namely, swing low on October 2022, swing low on October this year as well. As we know, Octobers are very bullish months on DAX, and actually previous 9 out of the 10 Octobers were bullish months. However, this October was a red month, and yet the swing low was made in October. Then comes November, and this week here was November 2022 CPI week. Well, this is this US CPI week. Similarities here are that on this week we got a clean break above daily 200 and above our important resistances here, while this November 2022 CPI week also saw clean break above previous resistance, which was then later reclaimed. This support, which was broken, later was reclaimed. Now, other markets, S&P made a breakout above the downsloping trendline, and it was a confirmed breakout. Now on a way toward July high, and Nasdaq is already there. This is July high on the Nasdaq, which was tagged in the overnight session on Wednesday on that US PPI spike higher. Now let's observe for a bit the OPEX chart, which I made on futures. Let's go down on daily. And just again to go through this chart, here are the examples of the previous 10 OPEXs, and the 6 out of 10, and if I include this, then 7 out of the 11 OPEX. So either swing low or swing high made on the OPEX day itself or on the following day, on Monday. Only this one was on Tuesday. And we can see here, for example, May and June were all-time highs. Now the question is, can we expect and can we get the similar thing next week? Next week also is a bit specific week, because one of the biggest US holidays, Thanksgiving, is next week. And next week we are going to have PMIs and FOMC meeting minutes on Tuesday. It is going to be without the press conference, but it is still an important one. And PMIs for European markets are going to be on Thursday, and on US markets in Thursday is going to be closed on Friday. Now the question is, next week, what are the catalysts? There is nothing on Monday, and on Tuesday we have FOMC meeting minutes, but obviously very late at 8 p.m., which means that could be slower sessions then. And after that we immediately get holiday when US markets are closed on Thursday and going to work with a shortened session on Friday. Now think about this. If you would be US trader, would you really trade on Friday? Or would you rather sit in your car on Wednesday afternoon and go to visit your family, your mother, grandmother, whatever, and spend Thanksgiving with your family on the long weekend? I think majority of them are going to do exactly that, and therefore I think both Thursday and Friday are going to see a lack of liquidity on the EU markets as well. So we are heading in the week with some catalysts and with very likely lack of liquidity. That lack of liquidity then could be used if nothing happens on the FOMC. Then that can be used to additionally push market higher and make it even more dangerous than it is so far. Now, why is this market dangerous? Let's observe US markets, for example. This is one of the scenarios that I marked here for myself. I will explain why. This is Nasdaq, and it is holding, as we can see, 4 gaps in a row. And now 4-day balance is here below July high, which was tagged here on this small red day in the overnight session on the PPI spike. And they're holding above this gap. As long as market is holding above the gap, that means the market accepted those higher prices. But as it goes higher and higher, obviously Johnny come lately buyers that waited too much, and now they're here. Why would you be long here? Your only way to make money along being long, like swing long here, is that you expect market to break above July high and then to actually go toward the all-time high. That is your way here to make money, and then the market could just squeeze and recycle those late buyers by making a false break above July high and then maybe filling this gap. So that can be one of the scenarios here on this particular market. Let's go to other markets, and the S&P also 4 gaps. And when we talk about gaps, when market doesn't feel a very visible true gap, like a hole here, you can see it on a blank chart. It's very visual. In the next few days, that means market accepted that price, and that actually that gap can hold for very long periods of time. Those gaps were made in spring, like these here below, like this one, for example, from March, and then here. You see above this gap, market was balancing, holding above it, and then pushing higher. The same thing happened, for example, here, market balanced above this, and you see how here market found support at the midpoint of this big candle, pushing higher. Then this is the example how market can fill a gap like few days later. It took here 4 days, for example, for this gap to fill. Then for this gap, it took a month. All markets, S&P, Nasdaq, DAX, have this gap here from the beginning of the August. And on all those markets, market were holding below that gap, making only lower highs, which means market accepted prices below that gap, and the prices could go lower. When market accepted the prices above the gap, it means it can go higher. And now on S&P, since Nasdaq is already at the July high, I think they want to test for first the September high. We shall see what's going to happen there. And now DAX, this rectangle represents this week, and on Thursday, when market closed below resistance and under 61.8, there was a chance on Friday that we actually could get a fill here, but a market again opened with the gap open, and they again showed every single feature of a strong market that they showed on the way up. And this gap, which they filled, is a 2-month-old gap also. On September 15th, filled on November 17th. Big gap from March, filled in September, 6 months later. This is that gap that every market has. And in the case of DAX, on the way down, they held below it. And all attempts to go toward that gap saw just lower highs. So when market is unable to fill those big gaps in the next several few days, then they are going higher. You see this back again to this March gap here. Observe this price activity here and compare this price activity from here, this from here, with this from here. Similar. Market made a limited pullback. This pullback never went below half of this candle. You see this candle above the gap. Pullback went to the half of it. Here, pullbacks went to the half of it. And holding and holding and higher. About reclaiming supports on the way up, DAX reclaimed 50,105, 50,270, and then on that CPI they made a breakout. So here, this bullish structure is not in danger unless we see a decisive move first below daily 200 and then below this. Buyers are still dominant, and the question is, since market on Friday came very close to the 16K, you see where the high of the day is on cash, 15,1952, which means 50 points, just 50 points to the 16K. What is going to happen on 16K if we get to 16K next week? Because why is this important? Because above 16K, similarly like there was nothing much above 15,840 up to 16K. Now above 16K, there is nothing much in this upper part up to the gap. You see these are two candles, and then above that gap another few candles up to the all-time high. And we know that daily ATR is even now it's like 170 points. As market goes higher and higher with acceptance above the gaps and stacking gaps behind, and DAX has two gaps, S&P and NASDAQ have four. That is a potent mixture to make this market a dangerous one. And dangerous for both sides, because sellers could be squeezed even further, and then that kind of market is just going to encourage people to chase, and then at one time rug is going to be pulled. And it doesn't have to be something, huge. We need to observe the previous pullbacks and the sizes of those previous pullbacks. And the sizes of this pullback, this pullback, this pullback. Those are all pullbacks of like 700 points. Then this one is like 600 point pullback. Then this one here is like 500, 600 points. This one was almost 1,000 points. But those, what the point is here, those like pullbacks, 500, 600, 700 pullbacks. Those pullbacks are normal size pullbacks on large time frames, on daily and especially higher time frames. And this move so far was more than 1,300 points, which means even if half of this retraces but buyers hold and push higher, the bullish structure of this move is not going to be changed. That's the point. So next week can be dangerous, because moves are getting extended, people chasing the market, and we are going toward another catalyst and toward potentially period of lack of liquidity due to the US Thanksgiving. That means on smaller time frames to be very picky about your entry points. Monday and Tuesday should give us answer. Can we expect something like this or not? Because time is ticking for the sellers, and the market held this gap with the cluster of untested cash closes. So now any kind of a bigger down move should at least feel this. So that would be it for first video for this week. This would be the bigger picture video, what to watch there, to watch those large time frame resistances on S&P, and if you trade Nasdaq, on Nasdaq as well, and to watch the area on DAX around 16K, to watch can they on some move down use and hold and defend 15,800, because below that first available lower support would be back testing daily 200. On the way above 16K, nothing much to this gap, and generally speaking nothing much all the way to the all-time high, and therefore 16K important. So that would be it for the first part. As always, I wish you a pleasant weekend and good trading.